Namaskar guys, this is Stock Yatra and we are looking at a series of lectures on the basics of the stock market. We understood why we need to invest in the stock market and we also learned what is the stock market. Now we will understand how the stock market functions and the mechanism of the stock market. Like we discussed yesterday, this is a share certificate, the paper format of a share of the olden times. This is a share of the Hindustan Motors Limited. As you can see here, the total capital is around 20 crores, and they've mentioned this is to certify that the name of the shareholder, how many number of shares that he is having, and what was the price at which he bought it. And then you have the date when the share certificate has been issued. And you can see here on the top that it shows there is a 100 rupee each, which is the face value of the share, but that is not the actual share price at which it was traded. And in the background you can absolutely see Akhand Bharat, our dream for every Indian. And I already told you we'll be looking at a digital format which is called as the Demat format, Demat format, which is short for dematerialized format. It is the digital format of the share certificate, the modern counterpart of a share certificate. The olden days, all these share certificates had to be transferred physically. There was a lot of paperwork to be done, which was quite a tiresome process. Today, in the digital era, we will be dealing with the dematerialized or digitalized format, which has made working more easier. And most of you would not understand how a share price is set or determined and how it changes from second to second. Now this change in the share price comes from the basic module or the basic concept in economics, that is the demand and supply concept. So in demand and supply, just like how demand and supply of any product determines its value, the demand and supply of a particular share determines its value. As we saw a few months earlier, tomato was traded at a price of rupees 200 per kg. That was when the demand went up and supply fell down, or demand actually remained same but supply fell. That is why the price had increased. Now when you look at the same tomato, it is being traded at a price of rupees 20 to 30 per kg. That is because the demand is again same but the supply is well. That is the reason it has come back to its original prices. The same way, the demand, with an increase in demand, share prices shoot up. With a decrease in supply, share prices shoot up, and vice versa. We'll be looking at what are the other price determinants later. Now we'll look at who are the intermediaries and the middlemen in the stock market. So intermediaries in the stock market. We saw what are stock exchanges. These stock exchanges are basically shops that deal with stocks. There are two major stock exchanges in India, the NSE and BSE. NSE stands for National Stock Exchange, right here, and the BSE stands for Bombay Stock Exchange. The Bombay Stock Exchange dates back to 1875, that is 150 years ago, and it was founded by a person called Premchand, who was a Gujarati, and we all know what Gujaratis are known for. These NSE and BSE are basically shops where different vendors or companies list their shares for trading with public or for the public to trade. Just like how a shop provides space for a vendor to display his goods for the buyers, the stock exchanges provide a place for the companies to list their shares, and it also provides a area for the transaction between buyers and sellers. Other actions or other duties of the stock exchange is also it is also ensuring liquidity and price transparency. Matching of orders is also part of their duties. Just like any market or any fruit needs a storage space, which is a godown or a storage center, shares also require a storage, which are called the depositories. Just like we have two stock exchanges, we have two depositories. We have the NSDL and CDSL, National Securities Depository Limited, and Central Depositories of Securities Limited. They hold they hold all the records of all transactions and the shares held by us in the Demat format. There are two clearing corporations, like we saw matching of orders. Clearing corporations, there are two of them, NSCCL and ICCL. Their duty is to partially take up the matching of orders and provide settlement for both parties. Both parties include buyers and sellers. So buyers need to have shares in their account and sellers need to get the money in their account. This process is called settlement and is taken up by the clearing corporations. So a seller, shares from a seller will go to the buyer and money from the buyer will go to the seller. This process is taken up by settlement corporations or the clearing corporations. This process is called settlement. We'll be looking at the duration of settlement later. And the other body is SEBI, which stands for Security and Exchange Bureau of India. As we saw, they are the policemen of the stock market. They take up the rules and regulations or the law and order of the stock market. They watch over all the participants and make sure that business is conducted fairly. And not to forget, we have brokers. Brokers like ZERODHA, Angel One, Grow, ICICI Securities, Kotak Securities, all of these are brokers. Just like the term, brokers are middlemen who facilitate transactions. The stock, and there are around 3% Indian population who actively trade in the stock market. So this 3% sums up to 3 crores. And the stock exchange cannot tend to the needs of all the 3 crore individuals. That is why they have middlemen or subsidiaries who are called brokers. The brokers are not any government institutions. So they are private institutions and they take up and they provide a better place for transactions. It is basically like how Puma, Adidas and Nike, they sell their products through Amazon and Flipkart. So Amazon and Flipkart are like brokers. Just like that, Zerodha and Angel One, they in turn trade in the stock exchange on our behalf. As you can see, this is I'm sorry. As you can see, this is the flowchart of a transaction and all the intermediaries who are involved in the same. We'll be looking at the types of brokers. Before that, let us look at this classic scene from Guru the movie, played by Abhishek Bachchan.
चलाते हैं लोग यहाँ पर, हम धंधा कैसे करेंगे? जितेश भाई, चिल्लाओगे नहीं, पीछे छूट जाओ। जब हम चिल्लाएंगे, सबकी पूर्ति करते रहेंगे। 1550.
As you can see here, there are many of them standing on the top and there are many of them standing on the bottom. These people who are standing on the top with their hands in the ropes and a notepad in their hand, they are called jobbers who are actually people who work for brokers, they take up orders from different buyers and sellers. Actually, this was the textile or the cotton wool market, but their counterparts in the stock market were called jobbers, and they had to take up different orders from people who buy and sell the shares of different companies. And the people standing down are actually people or shareholders who are placing their orders with them. So, with this said, this was the olden days when brokers used to have physical men standing and taking up orders. Nowadays, it is all digitalized, and we the shareholders or participants in the stock market, have to place orders through the broker's website or applications. And there are two different types of brokers: the full-time brokers and the discount brokers. The full, just like the name says, in the discount brokers, their brokerage or the charges that they or the fees that they charge is very less. It is of the sort of 0.02% to 0.05%. We look at the economics in the last section. Just to give you an idea, I've mentioned this. On the other hand, the discount brokers, their fees are enormous. It is usually of the range of 0.1% to 0.5%, which is 10 to 20 times more than what discount brokers charge. But the difference is that full-time brokers, they provide personalized service. They usually have flat fees, and they're suitable for large investors for whom even point or 5 paise difference in the prices of the share means a lot for them. So if they have a huge quantity of 1 lakh and a 5 paise change happens, so they're going to lose 5,000. This 5,000 is actually almost equal to the brokerage fees of the full-time brokers. So even 5 paise matters for them, and so they want a quicker execution and a faster servers. That is why they go for the full-time brokers. For examples of full-time brokers include ANAND, RATHI, Motilal Oswal, Edelweiss, etc. And when coming to discount brokers, we have ZERODHA, Angel One, and Grow. These are the top 3 brokers in India as of now. ZERODHA has 0.03% on equity delivery. Angel One has 0.03%. Sorry, 0.03%. And Grow has 0.05%, but Grow does not have any joining fees. That is the difference between these people. They have a lower and dynamic fees, and they are best for small time investors. Now we'll be looking at the prerequisites of the stock market. So coming to the actual or absolute prerequisites, they include a bank account, a trading account, and a Demat account. So opening most of you would be already having a bank account. You will have to open a trading and Demat account so that you will be able to participate in trades in the stock market. But don't worry, this is a 2-in-1 process. If you open a trading account with any broker, they will automatically open a Demat account and link it with the trading account with any of the depositories, which is NSDL or CDSL. So it's a 2-in-1 process and will not take a lot of time. It will take just around 10 minutes. And mostly they will have an ID proof, PAN card, and a bank account. These are the only documents that you need to provide. Apart from this, we also saw that we need to have some knowledge of the stock market as a prerequisite to invest in the stock market wisely. Apart from this, our big bull or the stock market guru Harshad Mehta has something more to say. This is another classical scene from Scam 1992, the Harshad Mehta story, and it's quite beautiful. Just listen. As he says, there are 4 things necessary. One is the tip or information. Second is the risk. How the higher the risk, the higher the reward. So risk. The next is emotion or sentiment. Controlling your emotion or the trading psychology is a very important part of investment. And with this, you need to add a little bit of luck. With that said, we'll be finishing our 3rd video of the series. Thank you for now. Jai Hind.